It's time now for Mortgage Matters with your host, Bill Sandvig. Bill Sandvig serves as market leader running the South Carolina coast for Movement Mortgage. Movement finished 2014 ranked as the #1 mortgage company in purchase mortgages for the Charleston Tri-County area. And they're still growing. And now your host of Mortgage Matters, Bill Sandvig.
Hello, Charleston. I'm Bill Sandvig. We are back with Mortgage Matters. I am here live in 1250 WTMA, the Big Talker studio. So please call in today, 843-556-1250. Call in with your mortgage questions, finance questions, real estate questions. I'm here to answer them. We'll talk through them. And maybe there's some people out there that got something to learn from your experience. I've been with Movement Mortgage going on for 2 years now, and it has been an absolute blessing to me and to my family and to so many of my teammates and team members and to clients and my partners and real estate partners. I'm going to talk a little bit today. The first segment, I want to talk about some changes that are coming in the pending months. They were supposed to kick in on August 1st. You might have heard them in the news about the CFPB, or the Consumer Financial Protection Bureau's Know Before You Owe Act, or the TRID changes. And they were supposed to go into effect August 1st. Well, that got delayed 2 months. Are we surprised the government delayed something? It's been delayed back to October 1st. But I want to talk a little bit about those changes and how the Consumer Financial Protection Bureau is going to impact you as a consumer. Then we're going to spend a majority of the show talking about Movement Mortgage. You know about what we do. I want to talk about a little bit how we do it and why we do it. And I'm going to be excited to share those things with you guys later in the show. But first, let's dive right into TRID. Again, if you want to talk to me, Bill Sandvig, we'll talk about some mortgages, call into the studio, 843-556-1250. And if you have any questions for me at all off the air, you can find me on my cell phone at 843-300-7870, or you can go to my website, www.lowcountrylending.com. That's my website. You can go on there and fill out a free buying power evaluation and determine what your buying capacity looks like. And I really want to urge you to go online, www.lowcountrylending.com, because you might be thinking that you're 6 months out or a year out from buying. And I urge you that now is the time to take action. Now is the time to start planning for that purchase. You don't want to just delay this conversation that we can have to plan and make a smart decision for you when you get within 30 days of when you want to move, because you might be surprised. There might be something on your credit that's maybe going to prevent you from being able to make that purchase. Maybe there's something that you didn't know about on your credit. You think your credit's perfect, but you're not actively tracking it. And there's some small little thing that's holding down your credit score. And we can deal with that now, so that in 6 months, your credit score is lifted to the highest level possible, and you're in the best position to save your family lots of money by getting a better interest rate, by getting into a better mortgage program, by putting down less money and still being able to have a lower payment. So please go online, www.lowcountrylending.com, and let's talk and have that conversation now. So the CFPB, the Consumer Financial Protection Bureau, was put in place after all the mortgage crisis that took place in 2008 and 2009, been well documented. And the CFPB is here basically to protect the consumer in financial transactions, protect them from the lender who is taking advantage, the subprime lenders, and they're there to make sure that there's some regulation on the mortgage industry and the lending industry to protect you, the customer. Well, one of the problems that the CFPB identified is that too many times customers were getting to the closing table on this big mortgage purchase or this big real estate transaction, and the documents for closing weren't arriving until right before closing. Sometimes even after the closing time was supposed to take place. I bet you if you've talked to a neighbor or you've talked to a family member or you've experienced buying a house, that you've heard that story. We were supposed to close on Monday and the bank wasn't ready. And then they told us maybe we could close on Tuesday. They weren't ready again. We were there on Wednesday. Still, the closing package wasn't there. We showed up at 2 o'clock. At 2:30, the closing package came. By that point, I was just so frustrated and fed up with the whole thing, I hardly even reviewed the paperwork. Well, the CFPB didn't want that happening anymore. So they're putting this rule in place that those closing documents, what you know as the HUD-1 transaction, that final closing statement, needs to be in the customer's hands, in the consumer's hands, in your hands, 3 business days prior to closing. 3 business days prior to closing. So if you're trying to close on a Friday, that means you have to have that settlement package in your hands by Tuesday. Otherwise, you're not closing on Friday. Now, the issue here is that there are so many companies out there where those packages are arriving in the very last second, the day after your closing, that this is a real concern and a real stressor for a lot of people that are inside the real estate industry, because they're wondering if banks are already taking 45 days or 50 days or 60 days to close these transactions, and they can barely get it done in that time. Now we're going to add on this window of time that they have to be ready even earlier. What's going to happen? Is this going to even stretch out the process even further? The answer for a lot of companies is yes. And there's a lot of companies coming out that are saying, look, we already need 45 days to get your loan ready, but now we have to make sure we have that closing package out 3 business days early. Otherwise, our bank is going to be exposed to huge potential fines that can be issued by the CFPB. And when I'm talking about huge fines, I'm not talking about small ones. They can be as much as $1 million per offense for not meeting the requirements of the CFPB. $1 million per offense. That could cripple many companies in a very, very short time. So the banks are nervous about this. They're nervous about this 3-day wait. And so some banks are even going further to say, well, we're going to be extra conservative, and we're not going to make it a 3-day wait. We're going to make it a 7-day wait, and we're not going to let people close until we have that package 7 days earlier than your scheduled closing. And if we don't have it 7 days early, then you're going to have to move your closing date, because we don't want to risk running into those fines. We don't want to risk being exposed to the fines from the CFPB. So now 45-day closings become 55-day closings, become 60-day closings. And let's think about how that impacts the consumer. So if you're out there and you're a first-time home buyer and you're looking to do a government FHA loan where things just tend to be a little bit slower for most companies, Movement Mortgage is proud to say that, hey, we can close a FHA loan in the same amount of time as any other loan, and we'll do it in less than 2 weeks for you. And, we're going to stick to that, and we're going to stick to that delivery. But most banks are saying, hey, if it's an FHA loan, a government loan, a VA loan for our veterans, we need 45 days, maybe more. Now, after this changes, after the Know Before You Owe Act kicks in, we're going to need more time. We're going to need 55 days. If you're out there shopping for a home, and you know just as well as I do that the Charleston Tri-County area, the real estate market is very hot, and multiple offer situations are all over the place. It's very unlikely. It's actually more rare these days to end up in a one-on-one situation where you're negotiating back and forth with the seller and just one buyer, because typically the seller has got 2 or 3 buyers that they get to pick from, especially if that house is a good deal, especially if that house is in good shape. So more and more, you're going to go out and find that house and end up in a multiple offer situation. What happens if you run into a cash buyer? Well, you're already at a disadvantage because you're getting a loan and they're getting cash. So maybe you really want this house, so you're willing to spend a little bit more for it, and you're willing to put out some additional money to get that house compared to what the cash will spend, because the cash is trying to make a good deal. Well, you're further at a disadvantage because your closing with the big banks is going to take 60 days, whereas that cash transaction is going to take less than 2 weeks. That could be the difference of 3 mortgage payments. 3 additional mortgage payments that seller needs to make compared to that cash buy. So now, even though the cash is going to offer less money, the seller could still there could be outside influences where that seller has to move on. They can't wait 60 days for your loan to be ready to close with a big bank. They can't wait that time frame for you to be able to get your loan through process, go through the entire approval process, and then wait an additional week for after your closing documents are finally prepared to close. That's a huge disadvantage that's being created by this TRID change. I agree it's a good thing. It is a good thing for a consumer to have those documents up front and early, and that's why Movement Mortgage has created a process that allows for that to happen already. We already have the expectation that our files are going to be underwritten in 6 hours and that our loans are going to be through processing in 7 business days. So we're not running into this situation like the other banks are. We don't have the packages going out last minute. For us, man, we're thrilled about the TRID changes. We're kind of upset that they got delayed to October because we know that when this happens, everybody else is slowing down and we're going to get faster. We're going to get faster because what we're doing is we're actually creating an entire new department inside of our company that's going to allow for as soon as your loan gets approved, it gets assigned to a closer who's going to start working on your closing documents. We're not going to wait till the end of the process like everybody else is. Everyone else is going to do the entire process just like they do now. And then as soon as that loan gets closed, they're going to send it into the closing. They're going to send it into the closing department, and that week-long wait is going to happen. With us, we're preparing the documents ahead of time. What that's going to mean is sometimes we're going to be spending man hours and spending time on loans that maybe aren't ready to close for a longer period of time. Maybe something changes. Maybe the inspection doesn't go right and the buyer backs out of the deal. Maybe the house doesn't end up appraising and some third-party influence causes the transaction not to take place. We understand that this is going to be a little bit of extra work on Movement Mortgage's behalf, but we also understand that this is going to allow for us to deliver a superior experience for our buyers and a superior experience for our real estate partners, our builders, and our real estate agents, that we're going to be further separated. So we are grateful to the CFPB for the changes that they're making. We're looking forward to the TRID changes that are taking place. We're looking forward to the Know Before You Owe Act because we know that it's going to further separate us in the industry. If anybody has any questions about this stuff, please, I am here to answer questions. Here, 843-556-1250. Call into the studio. We are live. Also, you can call me off the air. You can shoot me a text message. My cell phone, 843-300-7870. Please call in. You know, if I can't answer your question right away, maybe you're calling about something that I don't specialize in. I promise you, I've got a partner, someone local who can help you. Someone who knows what they're talking about, someone who's an expert in their field, whether it's a financial advisor, whether it's a real estate agent, whether it's a insurance broker like Andrew Muller at Mappus Insurance. Andrew does an incredible job. I've been partnering with him for a number of years. I don't know anyone in the industry who knows more about the local market than Andrew Muller does. I've seen him speak many times. He's been on the air many times. He knows flood insurance and the flood requirements better than anyone I've ever talked to. I'm telling you, you talk to him about your flood insurance policies, the changes that are coming up with flood, and he's going to save you money. He's going to be able to talk you through maybe some simple changes you can make to your house to improve your flood insurance rates, to improve your homeowner's insurance rates. It's local service like that, which is so important. A local real estate attorney like Jimmy Fody of Fody Law. You can find Jimmy at www.fodylawfirm.com. And this guy is a professional. This guy knows his stuff. He's been able to talk through and walk through and take us through very, very difficult real estate situations, title situations. And I mean, this guy is a pro. He's been in the industry and here in the local market. I can't stress how important it is to have local partners, local people that are here to serve you, that don't go away after that transaction's done. If you're calling someone online and just going to a 1-800 number, you're doing yourself a disservice because they're not going to be there to help you and to serve you through that process. So that's a little light into the TRID changes, the Know Before You Owe Act that's coming up. And when we come back, we're going to talk a little bit more about Movement Mortgage and what we do and how we do it. Everybody knows what we do. We do mortgages, but you really don't know how we do it. How do we do it so fast? Why do we do it so fast? Stick right here on 1250 WTMA, The Big Talker. I'm Bill Sandvig, and this is Mortgage Matters.
Bill Sandvig has more Mortgage Matters straight ahead on 1250 WTMA, The Big Talker.
WTMA.
This is Mortgage Matters on 1250 WTMA. From Movement Mortgage, here's Bill Sandvig.
All right, we are back with Mortgage Matters. I'm Bill Sandvig on 1250 WTMA, The Big Talker. We just spent the first segment talking about the CFPB's Know Before You Owe Act. Basically, it's a change that's coming up and down the pipe a couple months off, where all the mortgage disclosure documents are changing. They're going to be looking different. The HUD-1 disclosure is changing as well. And the big thing here with that change is that it's going to be required that banks have the closing documents out to consumers at least least 3 business days prior to closing. Some banks are going as far as 7 business days out prior to closing. And this is really the concern here, is that this is going to stretch out the time that it takes for a mortgage or for a real estate transaction to take place even longer. Movement Mortgage is proud to say we don't feel it's going to slow us down at all. We feel we can deliver on our promise of 6-hour underwrites, 7-day processing, and 1-day closings. So you need to close a loan in 2 weeks. You want to be competitive against a cash offer, then come to Movement Mortgage, because we're still going to be able to get it done. Even when the rest of the industry is slowing down, we're figuring out ways to be faster, be better, and do more. If you've got any questions for me off the air, please shoot me a text message. I'm going to get it right now. I'll answer it on the air. Or you can give me a call on my cell phone, 843-300-7870. Please reach out anytime. Go to my website, www.lowcountrylending.com, and you can fill out a free buying power evaluation where we can plan ahead and start planning for your next real estate transaction. And if you're on the fence or think you can't buy right now, I'd urge you to reach out to me, because so many people come across my desk thinking that they're not in a position to buy, and they come across into my office and they think that they wouldn't have the ability to purchase, and they're just pleasantly surprised how close they actually are to making that dream of homeownership a reality. You don't need a whole lot of savings to be able to get into a house. There's programs out there that allow for no money down. There are grants out there that help free with down payment. There are programs that allow for relatively low credit scores to be able to get into a house right now. And if you have a really poor credit score, if you've had some financial stress in your past, I can coach you through that. I can help you get through that and give you some key things to key in on and focus on to help you be able to be in a position to buy in a relatively short amount of time. Some things on your credit report don't matter. You don't have to worry about paying them off, and you can still be able to buy a house. Some things you do. I need to be able to get you into my office, have a conversation with you, engage with you to help you through that. And I'm telling you, owning a home is not a matter of if. I promise you, it's a matter of when. If you have the desire to own your house, I promise you that Movement Mortgage can get you there. It's not a matter of if, it's a matter of when. So I want to talk about how. Everyone knows what Movement Mortgage does. We do mortgages, and we do them well. But I want to talk to you about how we do them. How do we deliver on a 6-hour underwrite, a 7-day process, and a 1-day close? How are people out there talking about, my gosh, I just put an application in with this other company. 45 days later, they told me that they couldn't close, or they still weren't going to be ready to close for a couple more weeks. My real estate agent got me in touch with Movement Mortgage. We put the application in, and we closed 8 days later. How is that happening? Well, I'm going to break it down by going through 2 loan procedures about the way that everybody else is doing it and the way that Movement Mortgage is doing it. And this isn't copyrighted material. Movement Mortgage has actually gone out and done consultations with other companies, trying to coach them about how we do it, how to make them better. And we've literally been laughed at, saying that it's an impossibility, that the companies that we've gone and done consultations with said we could never make that transition. We're too far gone, basically, is what they were saying. So here, when I was at a big box bank, my prior company 2 years ago, here is what a mortgage looked like from the time that an application came in until the time that loan closed. So the first step is very similar, right? It's a phone call between a customer and the loan officer. And the customer is going to direct the loan officer directs the customer to complete an application. The application gets taken, and the loan officer pulls credit and collects documentation enough to make a decision on whether that person can buy a house. And maybe they collected W-2s, maybe they didn't. Maybe they just pulled credit report and had a conversation. But they'll send out a pre-qualification letter. That pre-qualification letter says this is not approval for a loan, and they send that shopper out into the world with their real estate agent to find a house. When that and then things kind of go quiet. Maybe it takes a week, maybe it takes a month while that person's shopping. When that person goes out and finds a house, they write a contract with that pre-qualification letter and they ratify. Now the contract makes its way back to the loan officer or to the bank. The bank takes the contract, and now it's time to really get started. The loan officer maybe takes a day to load that contract information into his system and to issue the loan documents. And Then after they send those loan documents out, they also start collecting information. They put together hopefully a very complete and very thorough file of all the things that they need in today's lending world for that specific program from that customer and the loan documents. It might take this customer a day or two to get things together, and they sign all the loan documentation and they provide it back to the loan officer. The loan officer collects these items and diligently sends them into the processing center. Now things slow down. We're already on day 4 of this 30-day real estate transaction, but now the processing center for the big bank knows about this loan for the first time. That a processor is assigned, and that processor is given 7 days to look at that information and get the file ready to send off to an underwriter. So they're cleaning the file up. They're making sure the paperwork is in order, making sure that there's a minimum number of things there in order to go and issue a decision. In 7 days, or day 11 in the process, the file is now assigned. And I'll tell you, you've heard that statement that work time fills into work time allotted. Basically, if you give someone a week to do it, it's going to take them a week. If you give them a day to do it, it's going to take them a day. Well, when you give a processor 7 days to do it, it takes them 7 days because they got all these other files that they're worried about. That last day, that file gets assigned to an underwriter. The underwriter now has 72 hours or 3 business days to review that file. The underwriter, because they're also busy, they review that file on that last day. Maybe it even creeps past that because they're really, really busy and it gets delayed a little bit. Well, now on that 3rd or 4th day of underwriting, we finally have an initial review from underwriting and a decision is made on that file. It is now day 15 in our process. You have had a house under contract for over 2 weeks, and an underwriter has now looked at your file for the first time. You get a list of conditions back. All these items, there's missing pages in your bank statements. There's missing things, missing that, missing this. And you get a list of things that you need that the underwriter's requested. And it probably crosses your mind, how come I gave you this stuff 2 weeks ago. How come it's taken 2 weeks for you to get me this list of things that I need for closing? But you move forward and you collect all those items and you give it back to the loan officer, and the loan officer reviews them and sends them back into processing. Now the processor has their time again. They've got 3 or 4 days to review those documents that you've provided to send them into underwriting. Finally, they do that. They send it back into underwriting. Now underwriting has additional time to make that review. And now the 3 days that you took to get those items, the 3 or 4 days that processing took to review those items, the 3 or 4 days that the underwriter took to do that second review, we're at day 27 in your process. There's no time left. You're supposed to close in 2 or 3 days, and there is no time left for anything to go wrong. Everything has to be perfect at this point. And the problem is that everything is usually not perfect. There's usually something else that needs to be done, and now it's a fire drill. And you're chasing down conditions at the last second, and the bank is telling you that we don't have everything that we need. I'm sorry, you didn't get us everything that we need in a timely manner. We have to move your closing date because you're out of time. That is what I used to do. That's how my experience used to be. That's how the other banks do it. This is how Movement Mortgage does it. I'm going to talk fast. From the time that before you even have a contract, before you've even picked out a house, Movement Mortgage is going to collect all your information, all your documentation. When we send that in, before you even have a contract, the underwriter makes an initial review, and they're expected to make that initial review when the loan officer provides the documentation in. There is no processor. It goes directly from the loan officer into the underwriter's hands. No time passes, and the underwriter, as soon as that handoff is made, the expectation is they'll review that file and make a decision in 6 hours. 6 hours. So now the decision is made in 6 hours after you providing the documentation rather than 15 days. Movement Mortgage is now 14 and a half days ahead of the competition in timeline, in speed. 14 and a half days. The loan officer issues a decision. Now, after the decision is made, it gets assigned to a processor. The processor takes that list of conditions, the exact same conditions from the bank, and they reach out to you and tell you what's needed. And maybe it takes you a couple days to collect those items. When those items come back, we're going to send it back into underwriting. We're not going to wait for third-party items to slow us down. We're not going to wait for the appraisal to be done. We're not going to wait for the title work to be done. We are going to worry about your documentation and your stuff, the consumer's items, so that you can be done with your part of the process. The appraisal, the title work, that's other people. Other people worry about that. You let us worry about that. We're worried about you. So you're going to provide us with those lists of closing items. And when the processor has them all satisfied, and there might be some back and forth because we want to make sure we have it all right, the processor is going to send it back to the underwriter. And now the underwriter has that same exact 6-hour expectation. The same 6-hour expectation they had in the front end of the file, they have in the back end of the file. They're expected to review it in 6 business hours. If everything goes well, you're going to be done. As a consumer, you're done. Your file is ready for closing pending the appraisal coming in. When the appraisal comes in clean, we're done. When the title work comes in, we're done. We do a cursory check and we send your file into closing. And that's how we're able to get it done so quickly, so much faster. That's why 70% of our loans in 2014 were cleared to close through processing in 7 business days after underwrite. 7 business days after underwriting, you were done with your part of the piece as a consumer. It's so powerful, it's so fast, and it's why we've grown to now not only we are the number 2 purchase mortgage lender in the Tri-County area, behind only one company, and that one company is a very, very big bank. We're not a bank, and we're number 2. So, hey, come back. I want to transition from how we do loans to why we do loans. Why does Movement Mortgage do what they do? We're going to talk about that next segment. I'm very excited about it. So stay tuned to Mortgage Matters on 1250 WTMA, the Big Talker.
Mortgage Matters continues next on Charleston's Big Talker, WTMA.
The Big Talker, WTMA.
Now, let's get back to Mortgage Matters on the Big Talker. From Movement Mortgage, here's Bill Sandvig.
Thanks for staying tuned to Mortgage Matters. I'm Bill Sandvig. If you've got any questions for me today, please call in 1250 WTMA, the Big Talker, at 843-556-1250. Or you can reach me personally on my cell phone at 843-300-7870. And please look me up on my website at www.lowcountrylending.com. You can go online, fill out a free buying power evaluation, plan ahead for your next home purchase, one of the biggest transactions you'll probably make in your life. And I'm happy to help and talk. So we spent the last segment talking about how Movement Mortgage does mortgages, and we do them fast, we do them efficiently, we do them, frankly, better and more excellently than anybody else in our field. It's why we've been the fastest growing mortgage company in the country since 2008, and certainly the fastest growing mortgage company here in Charleston Tri-County area. We've been in market for about a little over a year and a half now, and we've gone from nowhere to second in purchase market share behind only one very, very large bank, and very, very proud of that accomplishment. And I'd be shocked if we weren't passing them here before the end of the year. So I want to talk about not how we do it, but now I want to move on to why we do it, why Movement Mortgage does what they do. I want to lead the segment off with a soundbite from our team. It's about who we are, about why we do what we do, and then I'm going to expand on that soundbite after we. So please stay tuned and listen in.
Action, reaction, trial and error. Change, the rhythm of living. Out of overconfidence, fear. From fear, clear vision, fresh hope, progress. Change. It doesn't roll in on the wheels of inevitability, but comes through continuous struggle. Throughout history, change has shaped us, molded us, made us. Through determination, pain and persecution, valiant strides into the unknown. One common factor that unites each story is the calling to something more, something higher. What if a company took what was the weakness of an industry and transposed it into its greatest strength? What if someone decided that reinvesting in communities was not a side effect of success, but the purpose for it? We have. Industries, corporate cultures, communities. Captivating individuals and organizations, understanding that we have been called to reach beyond the mundane. A commitment to a new definition of excellence, to loving one another. Reinvesting into what matters most, people. We are Movement Mortgage, and we are a movement of change.
So that was a little soundbite from our marketing department that talks about who we are and a little bit about why we do it. And I want to share with you a couple pieces out of there. The Movement Mortgage mission is this. We exist to love and value people by leading a movement of change in our industry, corporate cultures, and communities. That's who we are. That is what we are trying to do. We exist to love and to serve. Mortgages is just a vehicle of how we are going to achieve the end game of making a difference in the people's lives that we are able to touch. It is not by accident that the owners of our company, Casey Crawford and Toby Harris, dove into an industry that was so deeply rooted in the financial troubles and the financial issues of our economy in the last 10 years. And they're so key in the family lives of our people. Our industry in the past has been marred by different banks putting people into loan products that they couldn't afford, into houses that they couldn't afford, into payments that they couldn't afford, knowingly putting these families in a bad position to gain for their own company or for their own personal gain. That is not who Movement Mortgage chooses to be. It is not who we will be. We want to be putting people into responsible situations, into situations that are going to be in a place where they can be lifted up, where their family can be blessed and grow because of the interaction they've had with the professionals in our team. Casey Crawford says, we want to be a company not measured by what we extract, but by what we give. This has never been more demonstrated when Casey and Toby announced 3 months ago that over the next 10 years, after our Movement Mortgage's corporate obligations and reserves have been met, that 100% of our profits are going to be transferred into the Movement Foundation, our charitable organization, and 100% of our proceeds and profit will be given and reinvested back into the communities that we serve. Wow. We'll be close to a 500 million revenue company this year, and the profits over the next 10 years are going to be given and reinvested to charity back into our communities. The number one vehicle that we're going to be doing this with is through places called movement centers. We already have a movement center open in Charlotte. We have another one opening in Richmond, another one in Tennessee. And I would be shocked if you're not hearing about a movement center somewhere in the Charleston Tri-County area inside of the next couple of years. The vision for the movement center is this. The Movement Foundation is going to go out and find rundown malls or warehouses in some slightly impoverished parts of the communities that we serve and revitalize these malls or these strip malls or these warehouses to create a space where, let me backtrack. We know that we can't be good at everything. Movement Mortgage cannot be good at everything. We can't go out and be excellent at serving battered women. We can't be excellent at going out and helping the homeless. We can't be excellent at helping the hunger and people that are dealing with hunger and trying to figure out what their next meal is. What we can be good at is mortgages, and we are good at mortgages. And because we're so excellent at that, we wanted to create a place where the companies, or not companies, but the missions and the charitable organizations that are already out there being excellent and pushing to make a difference in our communities can be lifted up. The Movement Center is that. We're going to be providing free or very low rent, subsidized rent for different mission groups, different churches, different charitable organizations that can come into the Movement Center and not have to stress about how are they going to be able to further take their mission or their goals to the next level, to alleviate the burden and stress of being able to have to make rent every month, to keep going with what their mission, what their calling is. That is the purpose. That is our why. Our why at Movement Mortgage is to serve. And it's all about serving. It's all about service. And I'm not talking about service where good customer service. We want to give good customer service. I'm talking about true service where the heart of the Movement Mortgage employees and the Movement Mortgage people and the people that you work with at Movement Mortgage is in service to the community, service to our partners, where we can lift them up and make them better, where our partners can walk away and say, wow, my business, my family is better because of the service and because of the partnership that I have in Movement Mortgage. That the community can say, wow, we have had a difference made this year in Charleston because of the service and because of the commitment that Movement Mortgage has to our community. We exist. Movement Mortgage, we exist to love and value people by leading a movement of change in our industry, corporate cultures, and communities. That's who Movement Mortgage is. I would love to talk to you more about who Movement Mortgage is, share with you what our goals are, share with, maybe even talk to you about how you can become involved with what we're trying to do, and different career opportunities that we have in Movement Mortgage. Please give me a call, 843-300-7870. I'm more than happy to talk to you about it off the air. If you got any questions for our last segment, please call in 843-556-1250 here on 1250 WTMA, The Big Talker. When we get back, we transition from what we do to how we do it to why we do it. Now we're going to talk about leverage. We're going to talk about why what we do and how we do it can make such a difference to you in your next real estate transaction. So please stay right here on 1250 WTMA, The Big Talker. When we come back, I got more to share. This is Bill Sandvig on Mortgage Matters.
There's more Mortgage Matters with Bill Sandvig coming up next on The Big Talker, 1250 WTMA. WTMA. You're listening to Mortgage Matters on 1250 WTMA. Once again, here's Movement Mortgage's Bill Sandvig.
Welcome back to Mortgage Matters on 1250 WTMA, The Big Talker. We just spent some time talking about Movement Mortgages, the what, the how, and the why. And the why is the big one for me, the big one for our company. The why is who we are. It's our lifeblood. It's our heart. It's why we do mortgages, why we do what we do. And I wanted to read our mission just one more time. And it's that at Movement Mortgage, we exist to love and value people by leading a movement of change in our industry, corporate cultures, and communities. And that's who we are. We are here to serve. We want to be a servant, and we want to be a servant to our real estate partners, to our building partners, to our clients, to our employees, to our team members, and to our communities, to anyone that we touch. That's what we want to do. We want to be in a place where we serve, and no one embodies that more than our leadership, Toby Harris and Casey Crawford. Hey, big news this week. Casey Crawford, our CEO, was named Ernst & Young's Entrepreneur of the Year for 2015, an amazing honor, which really speaks to what we've been able to accomplish and what he's been able to accomplish since 4 employees in 2008 to pushing 2,000 employees just 6.5 years later. And we have clear sights and a clear vision to be doing 1 out of every 10 purchase mortgages in the country inside of the next 10 years. And, it's an exciting thing. I mean, that'll put us as number 1, 2 mortgage purchase bank in the country, and really, there's really no reason why we'll slow down, and it all has to do with us leading with that servant heart. So I want to transition into the last segment here and talk a little bit about leverage. I want to talk about the how and the why, or the how and the what we do, and how that impacts you as a consumer, and how that can help you and make a difference for you in your next real estate transaction. If you've purchased a house, or you've had a family member purchase a house, or you know someone that's purchased a house, everybody knows to ask that, take that step and get what's called pre-qualified for a loan, right? You go out to your bank and you say, hey, I need to get pre-qualified for a mortgage so that I can go out and make an offer on a house. Well, I'm here to tell you that getting pre-qualified is not enough. It's the wrong step. You're not going far enough. Pre-qualification letters, if you've had one, maybe you can look at it, maybe you can look it up, you've got it filed away in your computer somewhere. That pre-qualification letter, somewhere on it, I don't care what company you go to, says this is not approval for a loan. This is not approval for a loan. But yet, even though this is not approval for a loan, we still will go under hundreds and hundreds of thousands of dollars of real estate transactions being exposed to this piece of paper that says this is not approval for a loan. You know how long it takes for a banker to make a pre-qualification letter? It takes 7 seconds. They change a name, an address, a price amount, and they hit print on a form letter, and that's a pre-qualification letter. As a seller, you've got no clue how much work went into it. You don't know what took place to get that pre-qualification letter created. You hope that the right amount of work was done, but you don't know. The right thing to do is to actually go to Movement Mortgage and get fully approved through underwriting prior to making an offer on your house. How does that help you as a buyer? Well, we move fast. We talked about it. You get us all your information in on a Tuesday. We're going to submit it on a Wednesday. Our underwriters review that file in 6 business hours, and 6 business hours later, you've got a commitment letter. This is not a pre-qualification letter that says this is not approval to lend. This is a commitment letter, an approval from an underwriter to go out and get a home for that size mortgage. Now, what does that mean? That means that all the hard work is done. That means when you go make an offer to the seller, your real estate agent, your lender gets to make a phone call and say, I just want to make sure you understand about the Smiths. The Smiths are done. They've been through underwriting. They've been approved. There's no chance that this is going to fall through. And on top of that, we can close in less than 2 weeks. How does that sound, seller? What does that sound like to you? It sounds like cash, right? It sounds like a cash offer, because a cash offer, if they've got cash, you show us the cash. We know it's not going anywhere. We know you can buy the house. We don't have to worry about a bank, and we know you can close quickly. Well, Movement Mortgage has just made you, the person who's getting a mortgage, look like cash. We're making you stand out. I'm telling you, the market is hot. You need to have as much leverage as you possibly can. What are some ways that you can create leverage? Well, you can offer more money. You can just simply offer more money than the next person. That's creating leverage. That's going to make the seller want to choose you. That's one way. It's the more expensive way. Another way that you can create leverage is to say, I don't care what the condition of your house is. You can just, whatever it is, I'll take it. I'm not going to make you fix anything. Sellers are going to like that because they don't want to have that back and forth about the buyers nitpicking on their house. That can create leverage. But it's also going to cost you money. It could get expensive. If you don't care about the condition of that house, you might not know what you're getting into. There could be some serious stuff going on. That's exposure you don't want to take. Movement Mortgage isn't going to make you spend money to create leverage. We're going to make you look like cash by doing all the hard work up front. We're going to do it all up front, and we're going to do it so fast that even though you're going out this weekend to look at a house, we're going to get you ready to be able to make an offer on that house that is stronger and put you in a better position. I want you to think, if you're going out there on a Saturday, hey, maybe you're in the car right now with your real estate agent and you're going to look at your next house. You've got a nice long list of 8 houses, and here's how this could go for you. You look at your 8 houses, you finally settle in on the one that you love, and tonight you're going to make an offer. You decide you're going to put an offer together on this house. Well, you get it together, you get your pre-qualification letter from the bank that says this is not approval for a loan. You submit it very late in the evening, and tomorrow, sometime around lunchtime, you hear from the listing agent, and the listing agent says, thank you so much for your offer. We've got 2 more offers as well, because if you love the house and it's a good deal, I promise you, in this market, there are other houses and other families. There are other families out there that love it just as much, and they're ready to take action too. So they come back and say, yeah, we got 3 offers, including yours. So go ahead. We're going to give you until tomorrow morning, Monday morning, to give us your highest and best. And now you're back to the drawing table. You're back there figuring out, how badly do you want this house? How much are you willing to spend on this house? And so you think about it and you ponder about it and you pray about it, and you come back the next morning and you say, real estate agent, here's our highest and best. We feel good about it. We love this house. We want it. You submit it. And later that evening or next morning, on Tuesday morning, you get the call. Your highest and best wasn't good enough. You didn't get the house. And you're heartbroken about it, but what are you doing now on Saturday? You're going to go ahead and have a little deja vu. You're going to do it all over again. Well, we don't want you to go through that. We don't want you to have a pre-qualification letter. We want you to be head and shoulders above the crowd. We want you to be fully approved through underwriting. We want you to have a commitment letter so that when you make that offer on Saturday, you might even get that house for less, because we're going to be able to tell that listing agent that you are done. There's no chance of the house falling through because the hard work has been done. We put you, the buyer, in position to get the house that you want at the very best possible price. That is what Movement Mortgage is doing for you. We've committed extra underwriters to treat you, the buyer that doesn't have a house yet, the exact same as we do someone who's doing a refinance or doing a already under contract. The big banks don't have time for it. They're too bogged down as it is with all the refinances that they're doing and all the contracts that they already have, and they're not willing to spend the extra money to have additional underwriters and additional staff to be able to provide this service for you that Movement Mortgage is providing. It's a win every single time. Thank you so much again for tuning in this week with me, Bill Sandvig, on Mortgage Matters. Please call me 843 844-300-7870. That's my cell phone. You can find me at www.lowcountrylending.com. It was a great show today. Thanks for tuning in. Tune again next week on 1250 WTMA, the big talker for mortgage matters.
You've been listening to Mortgage Matters with Bill Sandvig from Movement Mortgage. Call Bill for your mortgage needs at 843-300-7870. That's 843-300-7870. Listen again next week at this time for another edition of Mortgage Matters with Bill Sandvig on 1250 WTMA.